What actually distinguishes the wealthy class from every other class in every society, irrespective of their class, whether middle class or lower class, is that the wealthy people have what I call a playbook. This playbook is actually a top secret, and that is why in this video I'll be revealing more about this playbook so that as an investor or as an individual you can be able to click into that advantage and utilize this playbook in your own daily life or in your investment life. Wealthy people have an investing playbook, which is a system that's actually, put them through on how to invest their money and build their wealth. Statistics has actually shown that this playbook has been of immense benefit. It has been very helpful. It has been very, advantageous to the interest of the wealthy class. The playbook is actually on how to invest and build their wealth. Regardless of how the economy is actually performing, whether the economy is performing fairly or poorly, as it is being characterized in most developed society now, where we have an high level of inflationary trend in most of this society, and the effect of this inflationary trend is actually being felt by the lower class and the middle class, owing to the fact that most of them do not have what I call financial education, because the middle class actually use their credit card to fund their extravagant lifestyle and portray the effect that they are actually rich, but on the other end they are not rich. Their ostentatious lifestyle is actually being funded by credit card and loans, buying easy buy now and pay later. Then you talk about the lower class. The problem with the lower class is that when they actually earn this money, they spend the money. There is no plan for the future. There is no plan for any form of saving. There is no form of investment. They earn the money, they spend the money. So you can say categorically that there is actually a distinction between the wealthy class, the lower class, and the middle class. Then in my previous video, I actually make a distinction between the rich and the wealthy class, because a lot of us are always making the mistake that the rich and the wealthy class are the same thing. The rich and the wealthy class are never the same. When you talk about a rich individual, you are talking about a person that has a job and his lifestyle is actually being funded by his job. He earns a lot of money, of course, and immediately he stops working, that lifestyle is going to stop, because at the end of the day, it may not be able to continue his extravagant lifestyle. So for a rich individual, once he stops working, the money also stops. And once he stops working, the ostentatious lifestyle or extravagant lifestyle, or the kind of a lifestyle that is pervaded by fictitious kind of living, will also cease at that moment. Then when you talk about the wealthy class are actually those that, irrespective of the condition or situation of things, they can always be able to afford their lifestyle. Even when they are not working, even when they are sleeping, they can still afford their lifestyle. So there's a clear distinction between the rich and the wealthy class. How can we actually develop the playbook to our own advantage, so that at the end of the day, we can also play into that playbook, and it can also make us to have a change in our lifestyle, so that a lot of us can at the end of the day be able to invest our money, can be able to save our money, and can be able to grow our wealth at the end. I'm going to be talking about how to develop your investment playbook, and I'm going to be looking at some factors or some things that you needed to do that can actually help you to use this playbook to your own advantage. Number one thing you need to do is to get the money to invest. If you actually want to play by the playbook, you need to get the money to invest. A lot of people, make the mistake on how to actually allocate their money. They actually make the mistake on how to spend their money. They actually make the mistake on how to, you know, make sure that their budgetary plan actually works at the end of the day. Because in most cases, a lot of people earn the money and they spend the money. There is no plan for investment, there's no plan for any form of savings. And that's why year in, year out, they are always in the same position. So the first thing you need to do if you want to play by that playbook is to get the money to invest. And how do you get the money to invest? For you to actually get the money to invest, you need to get something to do. In other words, you need to have a job. When you have a job, then you earn something at the end of the month or at the end of every financial month. You can actually now be able to systemize that money, because at this point in time, you have a job and your job is actually getting you something at the end of the month. Now, when you get that something at the end of the month, how do you actually use that money? How do you utilize the money? Do you spend all the money? Do you actually invest the money? Do you actually save some part of the money? Or you actually end up spending all the money? This is the problem that is most common among the lower class and the middle class, in that in most cases, when they earn this money, they always end up spending all the money. As a result of this, they do not have the opportunity to build what I call wealth. If you want to build wealth, you need to systemize your money. And how do you systemize your money? You need to, systemize your money by breaking it down into what I call spending, savings, and investment. Some certain amount of your money will go into spending. For example, 60% of your money earned at the end of every financial month can go into spending. Then the remaining 40%, how do you handle it? 25% can go for investment and 15% can actually go for your savings. And what do you mean by savings? Your savings is actually your money that's actually set aside for a period of emergency, because life actually happens. A lot of people, most especially in the middle class and the lower class, they end up spending their money on liabilities, that is things that cannot actually create value in their life, and as a result of that, they find it very difficult to invest their money. They find it very difficult to save the money, and they find it difficult to build wealth. Spending your money will only aggravate your situation of not being able to build their wealth, because in most cases, a lot of these people or classes of people always will have what I call impulse buying. They always have this insatiable taste or urge to buy things that they come across. And in most cases, they don't buy things that can actually have value to their life. They always buy liabilities. Now, what can you do that can actually, prevent this impulse buying? Number one, you can apply what I call the 24-hour rule. Before you buy anything, make sure you give yourself 24-hour rule. Give yourself 24 hours to think about it. By the time you wake up the following day, that impulse to buy will have actually gone down at the end of the day. Number two rule you can actually follow is the rules of 5. Before you buy anything, if your money cannot buy 5 of those things, then you don't need to buy it. If you want to buy a phone of 200,000 naira, it means you must have up to 1 million naira in your bank account before you can buy a phone of 200,000 naira. The third thing that you actually need to do is that you need to know the goal for your investment. Now that you have actually, have a system, or you have a system on how you can actually systemize your money so that you will not be able to spend your money extravagantly or frugally, then there's a need for you to have a goal for your investment. Now, your goal for your investment could be a cash flow, or what I call a growth for your investment. Now, what do I mean by a cash flow? Cash flows actually generate constant flow of income to you at the end of the day. It generates constant flow of money for owning an investment. So if you're talking about cash flow, it means you have something that's actually generating money for you at the end of the day. So cash flow can be in form of a real estate, Cash flow can be in form of so many things that you can actually do that can actually generate you a cash flow. And when you talk about a cash flow, it means that you actually have money flowing into you on a regular basis. You talk about a growth, you're talking about the fact that you are actually investing your money over time through what I call a decade of a sacrifice. In other words, you are actually building a wealth. It is not a cash flow because at the end of the day, it is not generating money for you immediately, but through what I call a decade of a sacrifice. So the money is not coming immediately, that is, you are not actually spending that money, but rather you are investing the money. And at the end of the day, the more you invest the money, the more you make more wealth. Your money will begin to compound and you are making money at the end because you are actually going through the decade of a sacrifice. But when you talk about the cash flow, you have money coming to you on regular basis in form of a cash. What about growth and cash flow? They are never the same thing. Cash flow, you are actually investing into something that can generate constant flow of income to you. But when you're talking about growth for development, you're talking about you investing your money over time where your money will now begin to compound and you now begin to build your wealth. So it actually depends on what you actually want, whether it's actually a cash flow or what I call a growth for investment. So the choice is yours. So the number two thing you need to do is that you need to know the goal for your investment, which is what I call cash flow or growth for investment. Number three thing you need to do is that you need to have what I call strategy. So if you want to play by the playbook, you need to have what I call a strategy. So your strategy could be that you are a passive investor or an outsourcing or an active investor. If you have actually been following my videos very well, I actually explain the meaning of an active investor over time and the meaning of a passive investor over time, and also what I mean by outsourcing. So because of the time, I'll quickly explain them one after the other for clear understanding. As a passive investor, you own a piece of the economy. In other words, you are actually investing your money. There's a certain amount of money that flows to you at the end of the day. Whether you're into real estate or mutual funds or ETFs or any of those investment portfolios. So if you're a passive investor, you are not directly involved in investment, but rather you are indirectly involved. It is what I call you leave your money and forget about it. You leave your money in the sense that you leave that money there and you allow that money to compound over time, and you begin to put money into that investment to be able to stimulate it and grow over time as well, through what I call a decade of a sacrifice. You can invest your money into stocks, you can invest your money into VTI, which is what I call Vanguard Total Stock Market, which is the VTI. It's also an ETF. You can also invest your money into SPY, which is what I call the S&P 500 ETF trust. So it depends on what you always wanted or you want to invest your money into. So you can invest your money into stocks, into real estate, into mutual funds, into equity trust funds, into index funds, and a lot of them. You must always be investing. So for you as a passive investor, for you to be able to win, you must always invest your money, which is what I call always be buying, ABB. The second one is what I call outsourcing your investment. Outsourcing your investment is different from being a passive investor. If you are outsourcing your investment, you simply have what I call a financial advisor. When you have a financial advisor, it's actually a professional that can put you through and enlighten you and educate you and also give you what I call professional advice. When you pay that financial advisor, it is called asset under management. The advisor actually manages your investment and gets better returns for you at the end of the day because it's actually a professional. You can also outsource your investment into real estate, and when you do that, we call it syndicate real estate deals. When you talk about syndicate real estate deals, it means that you're actually outsourcing your investment into real estate. You have a financial advisor that is handling your investment in real estate through what I call syndicated real estate deal. Then when you talk about asset under management, it is actually what you pay your financial advisor at the end of the day. The third one is what I call active investor. An active investor is actually directly involved in portfolio investment, and for that reason the risks are higher and the returns can also be higher as well. But the risk part of it is that if you don't have financial education, if you are not grounded on how to invest, if you don't have idea about the financial market, it is not advisable for you to be an active investor, because at the end of the day you may end up losing all your money. It is more risky but with more potentials and return when you are actually an active investor. So for you to be an active investor, you need to do more research to know more about the market trends. To lower your risk in investment, you must invest more on financial education. If you want to play by the wealthiest playbook, the number 4 thing you need to do is to build your portfolio. You need to build your investment portfolio. See, for you to actually build your investment portfolio, you need to understand where you actually want to invest your money. You need to invest your money into assets first, and at the end of the day you can now begin to decentralize it or diversify your portfolio investment asset. What do I mean by that? Now, if you are trying to build your portfolio, what it means there is that you need to understand where you want to put your money. Is it into real estate? Is it into stocks? Is it into mutual funds? Is it into index funds? Is it into euro bonds? Is it into dollar funds? Is it into fixed income funds? Is it into money market funds? Is it into, there are many of them. So you need to understand where you actually want to invest your money. You need to invest only in one asset as a beginner. That is what, or where most people actually make a lot of mistake. When they want to invest their money, they want to do everything at the same time, and at the end of the day they always get their tails burnt. But if you want to invest your money, you need to start with one first. When you start with one first, and by the time you begin to have returns on the one you have actually started, you can now begin to diversify through what I call diversification of investment portfolio. You can now begin to look into other areas, but the basic thing is that you need to start with one first and dominate that one you have actually started. Through that, you can actually be able to make money. I, for one, actually started what I call money market funds. Then with time, after about 2 years or thereabout, I'm now investing into what I call balanced funds. And before I went to do the balanced funds, I made sure I met with my portfolio investment manager, and we had a one-on-one chat where we actually had a lot of conversation on the risk involved and so many other things. And at the end of the day, I decided to actually diversify my investment portfolio. So apart from the fact that I'm actually investing my money in money market funds, I'm also investing my money in balanced funds. But one thing about balanced funds is that if you are not a risk taker, don't even go into it, because at the beginning you might lose some part of your money. That's what I call medium risk. But if you are actually a risk taker and you are not bothered about what you are going to lose at the end of the day, then you can go into what I call the balanced fund. This is a top secret. So you need to do one first, then later on you can now begin to diversify your portfolio. You could invest or diversify into what I call your own business. Like I, for one, too, I'm actually trying to build a business now, though the business has actually been registered through the Corporate Affairs Commission, and is in the pipeline, and we are looking at what we can actually do to actually start very soon. So you can start investing in your own business, like what I'm actually doing also. You can also invest in what I call real estate. You can also invest in what I call stocks. You can also invest in what I call speculative investment. I've talked about this in my previous video. So if you want more on that, you can watch my previous video where I mentioned or talked more about speculative investment. Under speculative investment, just let me give you a clue. It also has its own risk, in the sense that you could lose your money. So if you don't know much about speculative, don't venture into it, because that's why it is called speculative. That is, it is not definite. Anything can happen at any time. You can gain a lot or you can actually lose your money at the same time. Then you can also invest your money into startups or cryptocurrency, or you can also invest your money into gold. Now, if you look at all these I mentioned so far, These are the wealthy people's playbook that they're actually using to make a lot of money at the end of the day. Number one, they actually have the money to invest. Number two is that they know the goal for their investment. And number three is that they have what I call a strategy. And number four is that they have or build what I call their portfolio investment. So if you put all these things into place, I'm best assured that you can actually be able to build your wealth at the end of the day. Number one, you need to get the money to invest. You can actually systemize your money into savings, spending, and investment. And you need to play by that playbook as well by being financially disciplined and making sure that you actually streamline your money and also systemize that money by breaking into savings, investment, and spending. Certain percentage of your money should go into spending, and certain percentage of your money should go into investment, and certain percentage of money should go into savings, which is actually for a period of emergency. Then number two, like I explained earlier, is that you need to know the goal for your investment, whether your investment is actually for growth or your investment is actually for cash flow. And I've actually explained what I mean by cash flow. I said when you talk about cash flow, it means that you actually have a constant slow flow of income on regular basis. Then I talk about the third one, which one I call you need to have a strategy, either as a passive investor, as an active investor, or as an outsourcing investor. When you talk about a passive investor, you are not directly involved. You leave your money and watch your money grow. When you talk about outsourcing investment, you actually give your investment to somebody to manage on your behalf, who is called the financial advisor, and you give that individual what I call asset under management. And I also mentioned the fact that you can invest your money into real estate, and that real estate can be actually given to a financial advisor, which is what I call syndicate real estate deal. Then I mentioned the fourth thing that you need to do, which is actually to build your wealth. And I said that you need to understand how you actually want to invest your money for you to be able to build your wealth. You need to understand that you actually need to invest your money into something, one first. Then later on, you can now begin to diversify your money at the end of the day. And I gave you my example that I, for one, I actually started with money market funds. Now, I'm also looking into other areas of funds where I can actually build my wealth over time. Right now, I'm actually investing my money into balance funds as well, where I'm also getting returns at the end of the day. So before you start, do one first and dominate it. Then you can now go into the second one or the third one if you have the financial capability. Now, other things you can actually invest your money into, like I mentioned earlier, you can actually invest your money into your own business, into real estate, into stocks, into speculative investment, and into gold or cryptocurrency or startup businesses. I actually believe that you gained something in this video. If you actually gained something, please subscribe to that channel and don't forget to share the video to those people out there. Till I see you next time, thank you and goodbye.